Peter Eliades with you with Stock Market Cycles Update for the week ending April 9th. That's Thursday, April 9th. No market on Friday. Good Friday. This is being recorded on Sunday, April 12th. As we're beginning the recording, it's around 3:43 p.m. Eastern Time. 3:43 Pacific Time. So I would imagine that the update will be online within an hour. That's 4:43, 4:45, let's say, to 7:45 Eastern Time. Okay, a lot to go over today. We're going to start out with closing price projections. And they've all been satisfied now. The S&P had been satisfied, but the New York and the Dow Industrials had fallen a little bit short. But let's try and quickly review now. This is the Dow Jones Industrial Average. This is nominal 20-day projections. That's 7 to 8 day offsets. And as you can see, the projection called for a minimum of 23,522 rounded off. And we closed on Thursday at 23,719, so well above the minimum projection. The next longer projection, the nominal 5-week projection, called for a minimum of 23,295. We had already reached that by Wednesday of last week, so Thursday we just went a little bit higher. But we're in the projection window, so that's the Dow. Let's take a look at the S&P. As you can see, the S&P is almost smack dab in the middle of the projection range. This is the nominal 20-day projection, 7 to 8 day offsets. The next longer one, this is the nominal 5-week offset, well within that projection window, although as you can see, there's a much larger projection window on top of us for the maximum upside projection. We'll talk about that in a little bit. And finally, let's look at the New York Composite. Okay, here's the New York Composite Index. That's the web chart. We don't need to see that now. As you can see, into the projection window, comfortably inside. This is the nominal 20-day, and the nominal 5-week, again, comfortably inside the projection window. So as I look at the closing price projections and the intraday projections, I believe the only projection that remains unmet on a minimal basis is the intraday projection for the Dow Jones Industrial Average. And you can see how close it is. 23,999. I think this one may have been met. This one calls for a minimum. Actually, the low is 23. The high was 24,899. So we moved into the projection window on that one. And on this one, the one that's a tiny bit short. I mean, if you look at that, you say, well, yeah, it just got into the window. No, it didn't. I'll show you we'll zoom in on that a little bit. There's a little space there. So there's room for that to for the Dow to go up to that particular area. And let's bring that out again. So the minimum here, again, is 24,037.49, okay? We gave you that number, by the way, on Wednesday's update as the minimum number we had to reach in order to get all projections satisfied. You can see how close we came. So for all practical purposes, we can say, especially because the closing projection's been satisfied, we can say this one has 2. That doesn't mean we can't go higher and get into that zone, but on a minimal basis, enough for me satisfies me to say enough has been satisfied. Okay, now the next important thing to look at is, what about the next longer offsets? If all projections have been satisfied, then what you want to look at is the next longer. Usually it's the next longer offset. It may differ from that, but usually you look at the next longer offset to see whether it has given, as you met the projections for the current offset, have you gotten higher projections? Okay, there's the one we just looked at. So now let's look at the next longer offset. Okay, this is the nominal 10-week projection, and look what we have. These are 24.2 to 27.6 offsets. These are the simplified offsets here. But look what we have. 1, 2, 3. 3, you'd start running into trouble with the first offset line, but you got 4, 5, 6, 7, almost a week and a half, a little over a week and a half, where you could play around in this area and not confirm a higher upside projection. On Wednesday, most of you will recall, I think, that we did 2 updates. We did a special update on Wednesday, and we wanted to show some technical patterns that were very, very close to being broken to the upside, and we said that this would be a logical place for the rally to stop. Well, the rally didn't stop there, and we actually told you that we had higher minimum projections. So the projections said we weren't going to stop there. The technical side of the market said we well could stop there. As it turned out, as far as Wednesday's special update that we did, the projections went out over the technical formations. But I want to show you both of the recent technical formations we've shown you and give you a slightly different interpretation. It's not an orthodox interpretation, but it's an interesting one. So let me show you those charts now. Okay, this is a daily chart of the S&P cash. And we showed you these black lines sometime within the last week, week and a half, where you go from the 2018 high. This is the high on, the 2018, the second high in 2018, the September high. And you take that line to the all-time high on February 19th, a little over a month and a half ago. You parallel that line off to the Christmas low of 2018, and we found some resistance there for a couple of days, but broke through it pretty convincingly on Thursday of this past week. So is there anything else that we can use as an interpretation for possible resistance? Well, there happens to be. And the interesting thing is that the pattern works on both the S&P and the daily advanced decline line, which we're going to show you in a moment. This is a rather unorthodox interpretation, and I must say that myself, I've done this very rarely in the past before. But what you look for in the market is slopes. The slope of a line. Is it up hard, sideways, down hard, down up or down on an intermediate term basis, not quite as steeply? Well, here is a pretty good uptrend line right here. This is the uptrend line from the low in the S&P on June 3rd of 19 through the low of October 3rd of 19. So here's the slope of that line. If we take the slope of that line and apply it to the Christmas low in 2018, look what happens there. Again, it's the same type of formation we had with the black lines. So now we've come up to that from underneath, and there's still a little more room. Let's zoom in there and show you that's a little bit more room there to come up. This would be a Monday's action around 28, 27.50. That's not to say we're necessarily going to get up there, but we have room to get up there within this technical formation. So I thought that was interesting. As I said, an unorthodox type of channel where you take lows and parallel them to other lows within the same formation. The reason it's interesting is, take a look at this. Here's the advanced decline line. We had originally showed you the black lines, the external highs, this one beginning in April of 19 to the January of 20 high, paralleled again to the Christmas low of 2018. And this was the reason I did the special update last Wednesday. That's because we had reached right up to this formation from underneath. And at the time, it appeared as if it might offer resistance to a further rally. Well, it didn't. We got easily through it on Thursday of last week. But look at this. This is a really good line on the advanced decline line, this bottoms line. There are two definite hits here. These are the external bottoms, but this low almost came down to it, as did this, as did this. So this is a pretty good line of lows. If you parallel that line down to the Christmas low of 2018, look what you have. Same type things we just showed you on the S&P. Potential resistance after breaking below it, coming up to it from underneath. Again, we'll zoom quickly into that one too to give you an idea as to what's going on there. And as you can see, we hit that line pretty closely. Not too much more room. You can go slightly up, but not too much more room on that in order to consider that to be a technical formation that could offer some kind of substantial resistance to the market. Okay, so basically, we've shown you what we're looking at. There's one other chart. Let me find it for you. Okay, this is the other chart I wanted to show you. What I did was look at maximum upside closing projections, okay? So on a maximum basis, I'll give you the numbers. Here are the numbers for maximum upside closes that we would still remain within this potentially very bearish configuration. On the Dow Jones, it's 25,043.12. On the New York Composite, it's 11,696.05, and on the S&P, you see it right here, 2865.50. This is the maximum upside projection that we can get from the nominal 20-day and the nominal 5-week projections. And so made a little rectangle of it here. So you can see if we get up there in the next few days, here's 1, 2, 3, 4. You could even extend it a little further over. So for the next week, basically, you can get a closing projection this high and still not confirm higher projections. So this is an important level to keep an eye on. I wanted to let you know that even if we got up to maximum upside closing projections, that we would not necessarily give higher projections. And my current strong belief is that we're going to see something like this. I don't know. Based on the technical patterns I just showed you, there's a good excuse for turning around immediately. As we're doing this update at 3:57 p.m. Pacific time, currently being recorded, the S&P, as you can see, way up on the top here in the crawler, is down a little over 30 points. So you can never tell from the overnights. They could be down 30 and up 30, the way we've seen volatility. But this is an important level in the S&P. So again, I repeat, even if we get to the maximum upside projection over the next week, 1, 2, 3, 4, 5 days, the 5th day you start to run into trouble, but that would be a week from this coming Monday, a week from tomorrow. So there's plenty of room for the market to do what it wishes to do without making a bullish configuration. One final last point. What you can do again is come down. We don't necessarily have to begin a huge leg to the downside again. We could have another sharp decline coming into this area and then start up again, crossing these offset lines at a much lower level and perhaps giving a projection back up to the current levels that we're at now. So that's another possible market movement that we see in the next week or two if we see something like that. So those are the possibilities we see right now. Think there's a good chance we're in the area of a potentially important top once again before a sharp decline begins. But there are other possibilities, and we hope we presented them to you. Thanks a lot for watching. We'll talk to you Monday evening.